Hi, this is Jim Jubak, and welcome to this week's Quick Pick video for Jubak Asset Management. This week's Quick Pick is Cummins. Now, Cummins is, ticker is CMI. Cummins is the dominant maker of diesel engines, especially for large heavy-duty trucks. They've had a successful strategy of building market share, basically because they've seen increasingly strict emission standards as being a plus for them in the market. Because to keep up with those standards, you have to produce new trucks, which is expensive. New trucks, you have to produce new engines, which is expensive. You've got to re-engineer them. And a lot of truck makers who used to make their own engines decided that they didn't want to spend that money and they would buy engines from Cummins. So Cummins has built market share. Now, the wrap on Cummins right now is that, hey, it is the big player in fossil fuel truck engines. And we all know that we've got to decarbonize the transportation sector. So doesn't this in the future mean that Cummins is going to be losing business? Well, Cummins is having built a successful strategy for gaining market share out of going along or being at the cutting edge of emissions controls for fossil fuel engines, has recently decided that, hey, it's going to be at the cutting edge of the green transition too. So it has a division called Accelera, which is where all of its green stuff goes. And that includes batteries, hydrogen fuel cells, axles for electric vehicles, truck motors, inverters for taking direct current, making it alternating currents, and electrolyzers, which are machines used to take water and break it apart into hydrogen and oxygen. So all those things work really well in larger transportation units. So they're not aiming at being a passenger car company. They're aiming at buses, trucks, power for, land-based power for construction, all those things. Now, right now, Accelera is, probably, well, it's certainly not profitable. What the company is doing is taking some part of the cash flow from its fossil fuel business and putting it into these new businesses. So we're seeing growing revenue. Now projected Accelera revenue is going to be probably about $1 billion by 2028. What I'm seeing is a steady stream of announcements from the BMW's bus division, which is one of the biggest bus divisions in Europe, that they're going to start using battery solutions from Accelera. So these are, it's a different market than, say, Tesla or BYD or any of those battery companies. They have to be bigger, more energy efficient. They have to be geared to the gearing of truck engines and buses and stops and starts. So you're really looking at a company that's decided it's going to stay in its core business where it's got a long history. It's going to use that core business to generate the cash to move into the new business. And it's going to take some of the big assets from that old business, which is that they have an incredible reputation for reliability. And if you're a truck driver, you got to keep the truck on the road. They've got customer service out the wazoo. So they've got a network of service. They've got a network of repair. They've got supply. All those things that really are big pluses for the diesel fuel sector are going to be big pluses going forward for battery car trucks, which still certainly need all of that stuff. So right now, so on the 8th, CMI was trading at about 288. 52-week range is 203 through 304. Stock does pay a pretty okay dividend of 2.34%. PE is only 15. Stock is up about 17% for the year to date. So you're making a profit while it makes the company is maintaining its profit for investors while it makes this transition. I think that probably you could make an argument, as Morningstar does, that it's a little overvalued right now, but not terribly. And again, you've got a somewhat decent dividend. You've got good growth prospects out of this, and and I hate to say this, but it looks like the transition from the current fossil fuel economy to the green economy is going to take longer than we expected, longer than we want, longer than we really have. Companies that are in the business of making the transition and that are using that time to make the transition, I think are a good place to put part of your portfolio. I own this in my 5-year and longer 50 stocks portfolio, where it's done quite well, and I continue to recommend it. Thanks very much for watching. If you found this interesting, useful, entertaining, hey, please subscribe to my YouTube channel. It's free. That way you get notification when we do our next one. We're doing about 3 a week, but not always on the same day. If you subscribe for free to the channel, you get notification when the next one's going to pop up. You can also, for free, sign up for my Jubak's Picks, jubakpicks.com, which has 3 portfolios, 12 to 18 months dividends and 5-year and longer. And you also get, besides access to those portfolios, you get 1 or 2 posts a day to your mailbox. You can subscribe to my jubakam.com newsletter, which has those 3 portfolios and 3 more for ETFs, volatility, some options plays, and even longer term for people who have much more longer time horizons than 5 years. So you can subscribe to that. Also, my wife and I moved to Italy in September 2023. Been a long-term goal. We're living in Venice for another couple of weeks, and then we're moving to Sicily for the summer. If you'd like to follow our adventures, we started a Substack, also free, called We Moved to Italy. You can find links to all those down below. Thanks very much for watching.